Warren, we've talked this morning about the coronavirus, but there are people who are waking up across the country now, kind of tuning in at this hour. So maybe we should address this again. With the markets indicated down 750 points, with concerns about coronavirus spreading and now worries about what that will mean for the global economy this year. I know this is not something you look at a day-by-day basis, but how do you kind of wake up and read this and think through it?
स्टॉक मार्केट रिलेटेड इंटरव्यू वीडियो पाने के लिए मेरे चैनल को सब्सक्राइब करें और बेल आइकन को दबा दें।
I don't think it makes no difference in our investments. I mean, there's always going to be some news, good or bad, every day. In fact, if you go back and read all the papers for the last 50 years, probably most of the headlines tend to be bad. But if you look at what happens to the economy, most of the things are extremely good. I mean, it's incredible what will happen over time. So if somebody came and told me that the global growth rate was going to be down 1% instead of 0.1%, I'd still buy stocks if I like the business and I like the price at which and I like the prices better today than I liked them last Friday.
Do you like prices better today? Will Berkshire be buying stock today?
Well, we'll certainly be more inclined to buy stock today than on Friday. Yeah. Anything we were buying Friday, we will be buying today, and feeling better about buying it.
You know, one of the things you talked about in the annual letter was stock buybacks of Berkshire Hathaway.
Right.
And for the first time, you told people to call Mark Millard in your office outright if they have $20 million worth of Berkshire shares and they're ready to sell.
Right.
That's a really unusual move. Why did you do that?
Well, we did it because it's very hard to buy blocks in the market of Berkshire. We practically never see blocks, except we do see them from estates or occasionally. But if somebody's going to sell $100 million worth of Berkshire, and we want to buy it, we'd like them to call us, and if we're buying at that price level, we'll buy it.
Dan Mahoney actually wrote in with a very similar question. He just said, "Is it hard to buy back the shares?"
Like, it's harder to buy back Berkshire shares than, say, Bank of America is buying back their shares. Bank of America bought back 8 or 9% of their stock last year, and they can really do it without moving the market. I mean, Apple's been buying back a ton of stock. They were buying stock at the same time we were buying stock. But it was easier for us to buy Apple stock, even though Apple itself was buying a lot of stock, than it is to buy Berkshire. Berkshire is, well, it's held by people that really plan to keep it. I think the amount of speculation in Berkshire stock is relatively low compared to most stocks. And so well, we bought $5 billion worth last year, but that's only 1% of the market cap. And I would say with a great many companies, you can buy 4 or 5% of the company fairly easily a year without disturbing the market. American Express has been buying it every year.
So with you putting out an ad in the letter to shareholders, does that basically mean you are eager to buy more shares back?
Depends on the price, but we'll let anybody know if we told them to call us before the opening or after the close, and only with blocks, and only if they're ready to do business. Now, there'll be a few people that probably try and call just to see whether we're buying or not. And we will not show a lot of patience with those people.
Let's talk about shares of Apple. Both from you just mentioning it with the share buybacks, with it being such a huge holding of yours. You've got more than 5.3% of the company right now?
Yeah, I think it's 5.6.
5.6%.
And it goes up every day.
Let's talk about what we've seen with the slowdown with the coronavirus, because Apple is one of the companies that has said it's going to have an impact, not only with the stores that they've closed there, with the behavior of Chinese customers, but also what happens with the supply chain.
Supply chain, sure.
How do you read through any of that? What are you hearing? Do you know more than we do on that front?
No, I don't know one thing more. I may see Tim Cook at the annual meeting. I see him in Sun Valley once a year. No, I don't think I've placed a phone call to Tim Cook in 2 or 3 years. I mean, all kinds of things are going to happen to Apple over the next 10 years. The real question is, what is the degree of pervasiveness and strength of that product 5 or 10 years from now? And I don't think of Apple as a stock. I think it's our 3rd largest business.
It's also a high-flying technology company. It's one that's been at the forefront, but you've said in the past you didn't buy it because it's a technology company.
I think it's a consumer product. In fact, I think I said this on the program a couple of years ago. I mean, obviously it's a consumer product company that uses technology, but we've got a lot of products that use technology at Berkshire. But it's an incredible company. and I should have appreciated it earlier.
There's a question that came in from, I guess the handle is GPG. This is a question that came in on Twitter, and the writer asks, you've said that you can do fair value estimates of companies you follow at any time in your head. So please do one now for Apple. What went wrong with your estimate for IBM, and how is that miscalculation different than for Apple?
IBM's an entirely different business than Apple. I mean, Apple doesn't resemble IBM anymore. It resembles See's Candy in a way more. I mean, it is a incredibly useful product to people that grows more useful as the number of people are involved. I mean, it's really interesting. You know, we call them smartphones. If you go back and look at the old telephone, that was an incredible, useful product. It changed my mother's life and my dad's life. It changed lives in every way, and they took a long time to become pervasive, and it was very expensive initially, but it changed the world. And the smartphone is part of hundreds and hundreds of millions of people's lives in all aspects of their lives. It's used as all kinds of utility. It's a consumer product.
Are you a consumer of its products at this point? You've had a flip phone for forever.
I'm glad you brought that up. I am now using, not very often, but I'm using the latest model, and I'll give you a little preview of our movie for the annual meeting. We haven't done it yet, but it will probably show me crushing with my foot my old flip phone while cozying up to the new smartphone.
When did you get the smartphone?
I've been given several of them, but including by Tim Cook.
One finally stuck?
What, pardon me?
One finally stuck? You're actually
yeah, absolutely. No, my flip phone is permanently gone. The number's been changed to my new phone. Wow. Yeah.
That's impressive.
I mean, you're looking at an 89-year-old guy that's barely beginning to be with it.
What do you like best about the phone? And what do you like least?
Well, I don't use all its facilities like most people. I mean, most people are living their lives around it, and I use it as a phone.
As a phone and nothing else.
I use it as a phone.
I don't like it when investment bankers talk about EBITDA, which I translate as earnings.
That was Berkshire Hathaway Vice Chairman Charlie Munger about a week and a half ago when he was speaking at the annual shareholders meeting for his other company, the Daily Journal, answering questions, giving his usual straight answers when things come up as questions. Warren, that was Charlie talking about EBITDA earnings, calling them BS earnings, although he said it a little more explicitly. You, in your shareholder letter for Berkshire Hathaway, also wrote about how you don't believe in GAAP earnings. How do you guys come about this? What do you think? You still have to report these numbers, but you're basically telling shareholders don't listen to them.
Well, it's two different principles. I mean, the GAAP numbers, which show us earning $80 billion, which is more than any company's ever earned in history. And we explain why that really isn't the relevant statistic, because a lot of that was just the stock market going up, which now gets counted in our earnings. And Charlie was expressing an opinion we both have. I mean, Charlie's the shy, reticent one of the pair, but Charlie is the best partner anybody could possibly have. We've been partners now for 60 years, and you could not have a better partner. He, at 96, a woman, since that meeting actually, in the last couple of weeks, a woman said to him, "Is it true, Mr. Munger, that you have 8 children?" And Charlie's reply was, "So far." So Charlie is very much an active partner, we'll put it that way. Next time I see him, I'll get an update on that to see what so far still going.
Okay, let us know what happens with it.
I will.
You know, we watch pretty closely Charlie's shareholder meeting for the Daily Journal.
Sure.
We send cameras out, we watch it. I've been out myself. Do you watch that meeting too to see what he has to say?
I watched it all on YouTube afterwards, but my sister and one of my good friends and my niece were all there, and no, I end up watching it, and I actually end up reading it usually too. I wouldn't miss it, but I don't go out for it.
Was there anything he said that surprised you this time around? And I'm just looking through some of his.
Actually, nothing Charlie says can surprise me.
Was there anything that enlightened you or changed your opinion on something? Maybe something.
No, but I learn from Charlie every time I talk to him. Charlie has the best 30-second mind in the world, so I can go to him with a new question, a new problem of any kind, and it goes through about 8 filters in his mind in 10 seconds, and he gets to the essence of any problem. There is nobody better to talk to than Charlie at age 96.
Is there anything you've talked to him about recently that you might be able to share? I don't know if you want to share the conversations you guys have privately, but anything where you've bounced something off of him and he...
Well, we talk about a lot of things, and we talk particularly about things we don't know the answer to. And we find the whole scene so interesting, whether it's politically or economically or the world. I mean, it's incredibly interesting to us, and we're particularly interested in each other's view, although I think I'm more interested in his view than he is in mine. And that would be a correct decision to make for somebody overhearing us.
What's something you guys don't understand right now?
Oh, we do not understand at all what the outcome will be in a world where $13 trillion is being borrowed at less than zero, and even Greece went on short-term. I think Greece, the 10-year bond is 1%, for example, and at the same time, in this country, we're having, under very good business and market conditions, we're having a 4.5% federal deficit, and nobody is concerned in the least. And we're talking about massive new programs and so on. Everybody talks about how they'll pay for them, but they really, the deficit's going to widen. So we don't know what world comes out of something where you start with extremely low interest rates and high rates of growth, and then what you do for stimulus later on. But the whole game, I mean, the game always unfolds differently than you expect, and that's what makes it so interesting.
You know, the 10-year, speaking of these low rates, just a little bit ago hit its lowest yield since July of 2016 this morning. I think it was 1.377%. We're back at 1.396%. But 10-year rates below 1.4%.
Yeah.
Would you have anticipated this?
It makes no sense to lend money at 1.4% to the U.S. government when it's government policy to change to have 2% a year inflation. I mean, you've got the government is telling you we're going to give you 1.4% and tax you on it, and on the other hand, we're going to presumably devalue that money at 2% a year. So these are very unusual conditions, and classical economics, it doesn't appear that, what do people do under such circumstances? Does everybody buy a mattress and stick their money under the mattress or what? And it particularly seems unusual when the world is generally prosperous, and but the game is always changing, but it always looks logical in retrospect, and it always looks puzzling prospectively. But there's always things to do that make sense too.
Like what?
Well, I hope that's what we're doing. It's buying good businesses at decent prices, whether all of the businesses or parts of the businesses through the stock market.
You told me a year and a half ago, maybe longer, that when you went out to try and buy whole businesses right now, it just looks too expensive, which is why you started buying pieces of companies, more stocks, putting money in places like Apple. Is that still the case? Is it still a huge premium to try and buy a company outright?
There's quite a premium, and part of the premium is because you can borrow so much money so cheaply in buying those businesses. Obviously, you can pay more for a business if you can borrow a very high percentage of the purchase price and of the future cash flow committed to it, and you can borrow at low rates with very little in the way of restrictions, restrictive covenants or anything of the sort. I mean, that's going to bring higher prices, and the demand for that is huge, and people look at those rates on the 30-year or the 10-year, and they say to themselves, gee, I can't live on that, and so they stretch and buy poorer credits. But that's just part of the human cycle over time, and that leads to something else, and that leads to something else. In the end, if you own good businesses at the right price, you're going to do fine.
You're often quoted as saying that you don't know who's skinny dipping until the tide goes out, who's swimming naked until the tide goes out, whatever it may be. You get the sense with a high tide right now that there's a lot of skinny dipping taking place?
We're certainly we're allowing people to borrow money on much weaker terms than we were 5 or 10 years ago. You couldn't borrow money at all there for a period of 10 years ago. I mean, you literally, Berkshire couldn't borrow money. I mean, everything stopped. And now the pendulum has swung dramatically, and yet we still have, we have very, very, very low rates. It's hard to believe that 10 years or 20 years from now we will have a substantial continuation of negative interest rates. But I've already seen things I didn't think could happen. So who knows what could happen? That's what makes it interesting.
Let's get back out to Omaha, where Becky Quick is with Warren Buffett. And there's a lot of important things happening, but don't forget that March Madness is right around the corner, Becky.
You should see what he's doing right now, Joe. He was rubbing his hands as you said that. Now you're talking his language.
Creighton, it was 70-35 at one point, and I had Creighton yesterday. I don't know if you were paying attention to that. Were you watching that at all, Warren? Nebraska plays tonight.
We pay attention. We pay attention to Creighton out here.
They're good.
We talked about it earlier this morning off camera.
They're peaking. I think they're peaking. I mean, they're getting better and better and better. The three-point shooting was, I think that one guy was 7 for 7 at one point yesterday, which is, I'd be like 7 for 10,000 for three-pointers, I think. Anyway, get back to business. I'm looking forward to it, Warren, and I know we always have our own personal bet. If I get them all right, you give me Berkshire Hathaway, which would be cool for me.
I'll tell you, if you get it all the way, I'll give you my Berkshire Hathaway shares all the way to the 64.
Wow!
Fill out a bracket if it's
Giving
perfect.
pledge.
That's the ultimate giving pledge.
Yeah.
That's how sure he is that you won't be able to do it.
I'm pretty sure.
Andrew, I hear you. I hear you have a question too, Andrew.
I actually have a couple, and I thought that I read the letter like everybody else over the weekend and was fascinated by so many of your comments, Warren. Specifically, I wanted to ask you, you talk about diversity on boards in this letter. And one of the things I wanted you to weigh in on, if you could, is I don't know if you saw, but David Solomon, the CEO of Goldman Sachs, on our air actually, announced a couple of weeks ago that he won't be taking any companies public, Goldman won't, unless they have at least one diverse board member, and are likely going to push that to 2. In the state of California, they put a law into place saying that you needed to have a female board member. And I'm curious what you think of not just the push towards more diversity on boards, but the requirement. Because I also note in your letter that you have very specific thoughts about what it means to be a board member, what it means to be an independent board member, how wealth is involved in all of that. What are your thoughts? Well,
At Berkshire, for decades, we've given the 3 factors in addition to integrity, but for board membership, and we want people who are business savvy. We want them to have a strong personal interest in Berkshire itself, and we've got directors who really represent shareholders basically at Berkshire, and I think they do a great job. Now, that doesn't mean that they don't think that we should delight our customers, that we should treat associates well, that we should behave well in our community, both local and national. But our directors represent the shareholders.